Alrighty, welcome back to Weenie Trades. So in this video, I'm just going to be giving a quick trading recap. I had two main winning trades and two main losing trades. So I'm just going to be breaking down these stocks, how I traded them, and where I think they might be headed in the future. So I'm going to be talking about Netflix, Google, Tesla, Square. Those are just the stocks that I traded. Otherwise, if you have other stocks, be sure to comment below and then I can break them down on the live stream later. So let's start off with Netflix. Netflix was my biggest winner of the day. Netflix, 587, we're really extended, but we had that extra little momentum to push today. So knowing that we're nearing all-time highs, I'm just looking for a little bit of a short squeeze pop because we're so close. Although the risk to reward was to be short Netflix, in terms of risk to reward, yes, but the thing is the trend was still up. So Netflix, a really good trade earlier in the day. So buying, take some profits because you don't know if the breakout's going to go. And what I also did was I did a put credit spread. So I sold the 595 strike put. That netted me $312 of profit. But since I didn't have, $59,000 to buy 100 shares of Netflix in this account, what I did was I bought the 590 put at the same time to make it selling a put vertical. So it's a bullish stance. I make money when Netflix goes sideways to slightly higher. And what did Netflix do today? It went sideways to slightly higher. So that's why it was the most profitable option strategy for the given scenario in the market. So Netflix, where do I think it's going to go? Netflix is pretty overbought. Netflix either needs to go sideways or lower. It can continue to go higher, but that's the less likely scenario. There's likely going to be a lot of profit takers in front of 600, unless, of course, the QQQ breaks out. And if the Qs break out and, make more new all-time highs and keep going straight, then sure. But Qs are already starting to go sideways and roll over just a little bit. So that was Netflix today. Today, I was bullish on Tesla, looking for it to move higher. However, the way I wanted it to move higher was a little bit different than the market's idea of moving higher. So Tesla, a little bit early on this trade, lots of upper wicks, a lot of profit taking. I'm accumulating in the flag, 737, with a stop just underneath, 736.26. And trying to get a little bit higher, but Tesla, a little bit of a false breakout, boom, starts to come back in. But then later I was able to accumulate Tesla and then, just barely wicked out. Look at this fill, 735.35. The low of this candle is 735.32. So right at the low of the wick, it's that just kind of market. It's either going to hit it or it's going to miss. Then Tesla had a nice, good, clean move. Trail stop hit when we made a higher high on the day. And we put in a tail candle. Usually that means we're going to sell off. But net, because of all the slippage and the stop outs, Tesla is actually just an expense trade. So minus $64 on Tesla. Shoulda, coulda, woulda. Tesla, I am bullish on it, but maybe it needs to go sideways to a little bit longer. It's still within this consolidation range. So Tesla, if it does get going, I am targeting about the 750 by tomorrow. That's just based off the option chain, 747. That's if we're bullish. Otherwise, if we're bearish, Tesla might just come all the way down to something like 720 if we're a little bit bearish. So those are the scenarios on Tesla, in my opinion. Google got clapped today. Google was just dropping while the Qs were dumping. Just a bit of profit taking. If we look at the daily chart on Google, we're still making this is an hourly chart. We're still making good progress though on Google overall, but now we're starting to be a little bit more bearish. As you can see, we made this support right here, 29.90. We flushed. Once we started to get really oversold, I started to buy the dip a little bit and then just peel profits into strength into 28.80. It did end up backtesting the former breakdown area though here on Google, 28.90, and that was some pretty strong resistance. And so Google's selling off still, but net Google is a pretty good trade because we had nailed that low, selling those put credit spreads as well. So Google might need to come down just a little bit more, especially the way that it's looking and the way the Qs are positioned. So that is Google. Next up, we've got SQ Square, and SQ had a great morning, but I played it a little bit off. I bought the dip right off the opening range breakout. I said I like Square over 273, and I can risk off of the low of the day. Well, I took some profits right up there on Square, and it just missed that liquidity move higher. I was looking for about 279 on Square. I just used that partial that I took right there to widen my stop. What this allowed me to do is I was able to give Square the chance to bounce had it needed to. But Square decided to drop, and then put in a bear flag. And that's a bearish formation. So what do? I put my stop loss right there. That's exactly a sell setup that I'd take if I was looking to short a stock. So I've got to stop out of my long if it's a if it's starting to break down, just like that. You sell right there, and then you put your stop loss above the highs if that's a sell setup. So I'm going to stop out of my long positions that make money to the upside if I'm getting a sell setup on the intraday time frame. So Square, morning little stop out, and then later Square, grab this little dip, stop right underneath this low, and once Square started to not break out, boom, look at this though. The fill was 271.80. The low of this wick is 271.87. 271.87 right over there. So yeah, thicker swim, you messing with me or something? Or am I messing with myself? I don't know. It's probably a little bit of both. Even though Square chopped me out on the day trading side of things, I am still holding Square long for the breakout into all-time highs. So if we check out Square on the daily time frame, we just pull it up here on the right, SQ, we just pull this up. I do think Square, as long as we can hold support up here, we can see new all-time highs and get up to that 300 level. However, it really needs to consolidate above this 266. But the way I'm using to express this Square trade is these debit spreads. So these debit spreads, they are actually down right now. So not every spread works out for me, and that's okay. I keep the risk inside the spread. And so I've had these spreads for quite a while. If in about 2 weeks, Square is above that 290 and above that 300, that right now it's worth $98. $98 turns into $1,000. So if Square has maybe if Square breaks that 266, I'm going to cut half of this just to salvage a little bit just in case, because the probabilities change if Square starts to break support down there at 265, 266. So that's my plan moving forward with Square. So net, because of all those stop outs, not a really big green day, a little bit less than $50. Alrighty, thanks for tuning in. See ya.